This is Dr. Amarjeet Kaur, Professor of Accounting at the Department of Management, Gurugram University, Gurugram. It is my privilege to be with you this day to talk about innovative debt instrument. In that, I am going to continue with the asset-backed securities. This is the last part of in this series, part number 8. We are going to talk today. So, asset-backed securities ABS is something I introduced in the part number 7 in this regard, where we discussed that asset-backed securities are the securities which are issued against illiquid assets. Illiquid assets like loans etc. are packed together and they are created as an independent financial instrument and then are sold in the market. That is what I talked about in the previous in the part number 7, which you can refer to in case you are interested to learn about that. So, in this part I am going to talk about legal factors of ABS as well as types of ABS. So, friends, the first important legal factor about ABS is the contracts. ABS, the asset-backed securities transactions are administered through comprehensive legal agreements. So, that outline the rights and the obligation of various parties involved, including issuers, investors, underwriters, servicers, so many special purpose vehicles. There are so many players in the asset-backed securities. So, we have to have the contract between these parties, that is the first thing, and then we have to have disclosures as well, because as I said there are so many players in ABS function. It is a complex asset. So, issuers are always mandated in fact to provide complete disclosures about underlying assets, structure of the securitization, risk associated. There are so many types of risk: credit risk, liquidity risk, market risk, prepayment risk. So many types of risk are there, right? So, it is mandated by RBI, it is mandated by SEBI as well, SEBI, that the disclosures should be made as much as possible to safeguard the interest of investors, right. So, that is a mandate by the regulatory bodies, that we should disclose all these clauses and the kind of arrangement different players have amongst them, because these players have contracts amongst them. They need to have very clear disclosure statements on the instrument when they are issued. Then there should be legal protection as well, that ABS transaction would have legal protections embedded in it to safeguard the investor's interest. These may include mechanisms like credit enhancements, representations, warranties regarding the quality of underlying assets and resolution guidelines. So, all these that in case there is a conflict between any party or issuer and the investor, how will it be resolved, right? What is the quality of the underlying asset, because all loans are not of the same quality. Some loans are at a high risk, another loan are at less risk. We know that, right? So, what is the quality of underlying asset? Because underlying asset could be the revenue from movie, it can be revenue from a aircraft slot. So we have to have warranties, representations regarding the quality of underlying asset as well. So, this is the whole mechanism which should be there. They should be included as a to enhance the credit worthiness of ABS, asset-based security. So, this enhances the credit worthiness, of course. So, if we have better disclosures, if we have clear contracts, if we have these legal protections, all these things actually improves the quality of ABS itself, right. So, the next thing I want to talk about is the types of asset-backed security. How many types of asset-backed securities do we have? So, asset-backed security can be created as out of almost anything that generates income stream. from mobile home loans to utility bills. They all are generating your home income. So we can actually create asset backed security from either of the things which have any income generation possibility, right? But certain types are more common. I am going to talk about those types of ABS which are very common. So here are certain types of asset backed securities: collateralized debt obligation CDO, home equity ABS, auto loan ABS, credit card receivable ABS, student loan ABS and other ABS. So let us discuss about them. The first one is collateralized debt obligation, CDO. A CDO is an asset backed security issued by a special purpose vehicle. The SPV is a business entity or a trust formed specifically to issue that ABS, and there are a variety of subsets of CDOs as discussed in the following slide. So, its CDO is what? CDO is a collateralized debt obligation and is issued by SPV only. This is a special purpose vehicle only. And as I have discussed in the past, SPV is a business entity, independent player, right? Or it could be a trust even, which is formed especially for this purpose of ABS, right? So SP has a very important role to play in the functioning of ABS. And CDO, the collateralized debt obligation, could be two types: CLOs, CLBOs and CBOs, of course. So three types. CLO is basically collateralized loan obligation. They are they are of course CDOs only, so collateralized debt obligations made up of the bank loans. So all bank loans, if they are actually collateralized, they are known as CLOs, collateralized loan obligations. Then we have CBOs, collateralized bond obligation. Then we have CBOs, which are composed of bonds of or other CDOs. So this is a different kind of type. So these are the collateralized debt obligation. This is the first type, and there are people who consider them as a independent even instrument of investment, innovative instrument. So there are books, there are researchers, there are experts who may take CDOs as an independent instrument, not as a part of ABS, because they have feature like ABS only, and there are experts who take them as ABS only. So I am discussing them under ABS. Another collateralized debt obligation could be structured finance backed CDOs and cash CDOs. So what are structured finance backed CDOs? They have underlying asset of ABS, residential or commercial mortgages or real estate investment trust debts, right? So we have trusts which are real estate investment trust, their debts are collateralized, right? The securitization is done of these debts which are by real estate investment trust. And then we have cash CDOs which are backed by cash market debt instruments, while other credit derivatives the sport synthetic CDOs. So these are CDOs are little complex one, but the security, if you look at the one I discussed was the bank loans where purely they are collateralized. Then we have pure bond obligation which can be created as a security. Then we have structured finance backed, which I just discussed. They are the underlying asset of ABS is the finance backed CDOs. It could be residential or commercial mortgages. This is very common in Western world. The residential, we remember the bubble. We remember in 2008 we have such a huge market collapse because of the bubble created by mortgage loans, these mortgages, and this is exactly what I am talking about here at this moment, because here the mortgages are used as an asset to back ABS, right? So that was because the quality of mortgages was not that great, which actually turned into bubble and collapse of the market in US in 2008, right. Then the last which I discussed was the cash CDOs. They are backed by cash market debt instrument, that is the little relatively safer or better. And then we have collateralized mortgage obligation, CMOs. Collateralized mortgage obligation, purely mortgage. They are composed of a mortgages, or more precisely mortgage backed securities, MBS, which hold portfolios of mortgages. This is the one which is the most riskier one, because here what is backing, or what is in the back of the security, the ABS is created based on the mortgages only. Collateralized mortgage obligations, they are composed of what? Mortgages, and then mortgage backed securities, both, right. So, which hold portfolio of mortgages only. In the bank ones we have bank loans. Here here it could be an housing loan provider institution or bank even, but here the major thing is the mortgage securities. So, mortgage backed securities, they are taken as the asset, as a backing the ABS, backing this security. Then we have a mortgage backed security, a MBS, right. So, what is this? Is a sometimes considered a type of ABS, but it is more often classified as a separate variety of investment, especially in United States. In India, especially in states, it is considered a separate type of security altogether, right. Especially in states, both operates either MBS or your CDO, right, the collateralized mortgage, or this mortgage backed security, MBS. They both operate essentially in the very same way. The difference lies in the underlying asset in the portfolio. Here the underlying asset is different than the previous one we discussed. So, this was about CDOs. The second category of the ABS is home equity ABS. Home equity loans, they are one of the largest ABS categories. In fact, these are the amortizing loans, that is, the payment goes towards satisfying a specific sum, and they consist of three categories: principal money, interest and prepayments. So, home equity loans, they are actually the largest chunk of the ABS available in the market. So, there are so many categories, as I said, but home loan equity is turned into security. After securitization, they are turned into financial asset known as ABS, and these are the amortizing loans. The payment of these loans goes towards paying principal money, interest and payments as well, because there is a loss of payments if somebody makes payment. So, this is how this is what about the home equity ABS. Then we have auto loan ABS. What are auto loan ABS? Is another large category of ABS. The cash flows of an auto loan ABS include monthly interest payment, principal payments, prepayments, and that is another amortization loan. So, if you imagine, you go to a car dealer, they always are keen to sell car on loan. They always want कि आप payment नहीं करिए, you don't pay me, we will, हम आपका loan करवा देते हैं मैम, हम आपका loan करवा देते हैं sir. Very happily they are extending you loan. Why? Because they are actually doing they are actually doing this ABS business. They are connected with the servicer, or they are connected with the special vehicle special purpose vehicle agencies, entities, and that's why they are promoting it, because auto loan ABS is common in India, Mortgage based ABS are not so much common in India, but auto loan based ABS is really common in India. So it's another large category of ABS after housing in worldwide data if I refer to. So the cash flow in auto loan ABS is that they include of course the monthly interest payment, principal payment as well as prepayment, as very much like in housing loan based ABS. So this is another way of amortizing loan, because we are amortizing it, we are through creating a security out of it. So this was the third class. The fourth type or the fourth class of ABS is credit card receivable ABS. This may sound interesting to you. The credit card receivables, the amount due on credit card balances are type of non-amortizing ABS, right. The auto loan was amortizing one. Here it is a non-amortizing, because there the card in itself is something which helps you amortize, right. They go to a revolving line of credit rather than towards the same set sum. Thus, there is a no fixed prepayment or payment amount, though new loans can be added to the pool. Because in car loan, we know exactly how much is being paid as a principal, how much as an interest. But here in the credit card receivables, it will depend, because you may be paid or you may not be paid, how much consumption of credit card is there, the interest is based on that, how much delay in payment is there, you know. So it's a non amortized ABS, and they go on revolving line of credit, because even if you have noticed, your credit card limit is always increasing for most of the time. Of course, it get decreased as well if non-utilized, etc. etc. There are a couple of conditions, but most of the time this is a revolving line of credit rather than a fixed sum. Unlike in ABS of auto or loan, or ABS of credit out of home loan, etc. So there is no fixed payment amount, unlike auto loan or home loan. And another thing is, new loans can be added to the pool, because same consumer would always has just on a click of button would add another loan. If somebody purchased something, is not able to pay, decide to add it for the 3 months, 6 months annual payment, right. So it turns into loan. So the amount of loan is not fixed, the amount of payment is not fixed. So this is a revolving one. That is the credit card receivable ABS. Mostly there is a lock-up period for credit card receivables, where no principal is paid. If the principal is paid within the lock-up period, then new loans are added to the ABS with the principal payment, that makes the pool of the credit card receivable staying unchanged. So the pool of the credit card will remain unchanged, but new credit limit may be added. After the lock-up period, the principal payment is passed to the ABS investor. So that is how this credit card receivable ABS work. It is very complex, but it is interesting. The another type of ABS is students loan ABS. The students loan ABS can be collateralized by either government student loan granted by any government ministry of education, or private student loan. The former have had a better repayment record and a lower risk of default. So what is student loan ABS? Here the loans which are given exclusively to students, right. There are two possibility. It is given to any individual and a privately, individually by any bank or by any other financial institution. There are non-banking financial institutions which are giving loans, right. So two possibilities. The loan is given to a student under some government scheme. There are many state governments, central government schemes where loans are available for higher education of girl child, boys, everyone, right. So if the loan ABS is created out of the loan which is against the government scheme, then of course they become more secured one, because it has a better repayment record and the lower risk of default, because there is a role of government there, there is a guarantee of government. So you are extending loan on behalf of government, and the government is there in between. So this is another asset backed security where student loans are used to create the securitization. Then these were the types of ABS. Last thing I want to talk about the players who are involved in ABS. First of all, issuer. Issuer is the entity who refers to or which refers to entities that originate or sponsor the underlying asset that will be securitized into ABS. Issuer can be financial institution, can be bank, can be credit card issuer, can be auto finance company or mortgage lenders. Any of them could be issuer. The second player in ABS is investor. The investors in ABS comprises institutional investors such as insurance company like any life insurance or any other insurance company. Hedge funds are investors, pension funds are investors, assets managers are investors. Individuals could also be there as investors. So we have issuers, we have investors, and then we do have underwriters as well. So who are underwriters? Underwriters helps the issuance of ABS securities by structuring the transaction, pricing the securities and arranging their sale to investors and ensuring compliance to the regulatory requirement of ABS. So underwriter is doing a lot of job. Number one, what they are doing? They are helping issuers to issue ABS security. Then they are by structuring the whole transaction. They are the one who give some structure to the transaction. They are the one who help in pricing the security, at what price the security will be sold at, because like we have share prices, same way we have security prices, right? And then arranging the sale to investor. They are the one who actually help us sell ABS as a security to the investor, be it institutional investor or individual one, and they are the ones who ensure compliance to the requirement of SEBI or RBI. So underwriter has a very good role to play. Then we have servicers as well. Who are the servicers? Servicers are they manage and administer the underlying asset on behalf of ABS investors. They manage and administer the underlying asset on behalf of whom? On ABS investors. They collect payments from borrowers, handle delinquencies and defaults, and distribute the cash flow to ABS holders according to the terms and condition of the securitization. So servicers have a very important role to play. They are managing and administering both underlying asset on the behalf of ABS investors. Let us say if I have bought ABS, right? So to me, this servicer is the person or the entity who is answerable, because they are managing, they are administering my underlying asset on my behalf, and they collect payments from the borrowers, the original borrowers. If it is a student loan, the students are the borrowers. If it is a housing loan, the house owners are the borrowers. And then they handle any default, any delinquency in between, and they are the one who distribute the cash to the ABS holders, because ABS holders are the investors, right? So these ABS holders are getting cash from whom? From the servicers. So servicers have a very good role to actually play in. So I will share few examples to help you understand ABS better. Let's say company L is in the business of making automobile loan, right? And if a person wants to borrow money to buy a car, company L gives that person the loan, right? तो L company ने loan दे दिया, and then the person is liable to pay the loan with a certain amount of interest. Of course, if I take loan, I have to pay back. If L takes loan, L has to pay back. So who is liable to pay back the loan? For the person L. Now this company L extends so many loans that it starts losing money, it starts running out of cash, right? So because company is giving loan to so many people from A to Z, thousands of people, hundreds of people. So a company, there's a possibility that company may start falling short of funds, right? So company L, which was giving auto loan or car loans, company L can then package these loans which it has already extended to different people and sell them to investment firm M, right? So M is what? L is the company which is giving auto loans. They are out of cash, they have given already so many loans, so they will make a package of these loans and they will sell this package of loans, which is an illiquid asset, to the another firm known M, firm M, and the M firm is an investment firm, right? So thus receiving the cash from the firm M, and now they would have more money so that they can extend more loans. So L will get immediately by selling these loans to M, L will get some more money and they will continue in their business of extending loans. Now this investment firm M, which bought loans of company L, right, investment firm M will then sort or pack the purchase loans into different groups called tranches. We discussed about tranches 1, 2, 3, like senior tranche or junior tranche. They are the one, they will actually sell these loans as tranches. So M, company M, the firm M, which is an investment firm, will sell them. And these tranches contain loans with similar characteristics such as maturity is similar, interest rate is similar, etc., right? Because auto loan which has a maturity of 5 years, they will be under one part, and a maturity loan having another years of maturity or interest, they would be different tranches, right? And then next, investment firm M will issue securities based on each tranche it creates, which is a similar to bonds. So each of these ABS has a rating indicating its degree of riskiness in terms of the likelihood that the underlying loans will go in default, right? So individual investor will then purchase these securities, these tranches, and receive the cash flows from underlying pool of auto loans minus any administrative fees which the investment firm M will keep to itself, right? So this is how exactly the whole set of ABS works. I hope this example would have helped you understand. Of course, services are there, underwriters are there, investment firms, issuers are there. So this is how the whole gimmick or whole market of ABS works. So with this, I would like to wind up, friends. Thank you very much for being with me. Thank you.